Good morning, everyone. Good afternoon, good morning, good night, wherever you are. Welcome to tradingsyndicate.org. I'm JJ, and this is where we teach real people how to make real money. What's up, Raj, Stealth, Kevin, Ginge, what's up? Hey, Tibby. What's up, Miguel? How are you? Good, good, good. Quiet. Rotation, rotation, rotation. So we sold a bunch of inventory up here at 68.95. We're buying it back here at 68.74. You know, it's the big washing machine. While we wait for all the macro people to figure out what's going to happen this year, we're just moving paper, right? In this case, electronic paper, electronic contracts, right? Buy them, sell them, buy them back, sell them. That's all we're doing. So let's go take a look. What do we got here? There's my pointer. Overnight inventory is long. Okay, it was short early in the session, and then we took it and sold it up here. So the majority of the trading, at least 70-80% of the volume, is above yesterday's close. We've already had correction back down, right? We got rid of a lot of nice inventory above yesterday's high. So we'll see what happens here. All right, I'm looking for back and forth trading. I'm looking for back and forth trading in yesterday's range. Okay, so let's see. What do we got? There's some shorts that are trapped underneath 66.88. So that's why we're finding some bids here. There's the night position, and there's the position from yesterday. So we're still in distribution, folks. We're still distributing that inventory, right? Let's go take a look at cost basis. I use 68.50 quarter to 57 3/4, right? And then you double it to 72, double it to 69.02, and then I've got 4, but you need 8 on the top of these. We went right to the top of 4 times profit. And then we put it on sale, caught a bid, put it on sale. Another little look below and fail of 68.72. Yeah, it's an odd looking profile, Raj. It's very, it's very speculative, right? And I told you guys at the beginning of this year that speculation is the business, right? I also told you guys that we're in, and I posted this on Twitter a little while ago. We had a look above and fail of 70.30, look below and fail of 67.88, failed to get to 70.30, failed to take out 67.88, and then rotation back up. Our high tonight is 69.04. My level is 69.03 3/4. So The levels are working. The market is doing what it should. For today, we'll look for back and forth trade, right, in between the close and yesterday's high. If we break the close, we're looking for the overnight low. To the upside, if we get accepted over 68.84, we'll be looking for the overnight high at 69.04. Right? If you're using a wider stop loss, it means that the market's more volatile. If you need to use a wider stop loss when the market's not volatile, it means your trade location is off. Because these markets are electronically traded, right? If you need to use a big stop loss in a slow market, it means your trade location is off. Let me give you an example. Right? If we took the look below and fail here of 67.82 or 68.72, good grief. Excuse me. If you did the look below and fail, you'd be long 74 and you could use 72 3/4 as your stop. Now you might want to use the bottom of that candle, and that's perfectly fine. But when the market is slow, you can go 67, 68.74, stop here if you want to, give it a couple of ticks, put your stop at 2, and you know there's going to be a seller here. So you want to make sure you sell, and there's going to be a seller here. Right? So all you got to do is you got to refine your entries, and you got to refine how you see the market and your execution. That's all. Right? Right? And it's going to happen. Right? When you're doing this, you're going to make mistakes. Right? Hindsight's always 20/20. Right? You're going to make mistakes. That's why this trade, you have to do it over and over and over and over and over again. Okay? I find that 1,000 is a good, 1,000 trades is a good sort of sample size, right? And why is that? Because the more trades you take, the more, how should I say, the better you are going to be at judging, judging the types of price action, whether it's slow, whether it's fast, where should I be trading, should I not be trading, stop placement, volatility, all of those things. You've got to be able to figure that out. Those are the subtleties of the business. Every business, there are general rules, and then there are subtle things, right? And you have to learn the subtleties of the trade you're taking. That's why I tell people focus on doing one trade well, right? Focus on doing one trade well, right? And learn it like inside and out, you know? You gotta learn the trade inside and out. You know, John Madden once went to a coaching class put on by Vince Lombardi, and Lombardi spoke about one play for like 6 hours, 8 hours, something like that. You know? Hey, all right, what's up, Christian, Hex, Kevin, Travis? Good to see you guys. Right now, I could talk about the look below and fail, and I'll show you a chart, and there'll be like 6 or 7 look below and fails, and they're all different, right? Trading is not cookie cutter, and that's why it's hard, And I was thinking about this. A lot of people want to automate this. It's very hard to automate something that you're not good at. So I would say do things manually first, and then find a way to automate the subtleties. That's the hard part. Now, of course, larger traders, like if you're trading $5 million, $10 million, $100 million, you have the ability to be offside. You have the ability to take on bigger business expenses. You can run more samples. But if you're a retail trader, none of that applies to you. So you've got to be really, really sure about what you're doing. The only way to do that is to focus on one thing and one thing well. That's why I tell people, if you're consistently profitable in one market, that's great, right? Then you can branch out to others. But don't try and trade 3 markets simultaneously if you're not making money in at least one of them, right? Don't switch from NASDAQ to ES to Russell to this and jumping back and forth. You're never going to focus, right? This is a business about focus, right? It's focus. It's all focus. Don't let anybody tell you different, all right? Right now, for example, what we're doing is we're waiting for the market to open, right? And, some days you're going to execute like a god. Some days you're going to execute like an idiot. It happens to all of us, right? Some days you're just off. That's why I always start the day trading the micro, right? I always trade the micro, and if it works, then I know I'm right. If it doesn't work, I might lose 30, 40, 50 bucks, right? I don't need to lose $300 or $500 to know I'm not trading well, right? The first owner of the brokerage firm that I worked for, the first firm I worked at, he gave me some very good advice. And this man was worth $600 million. He said, listen, kid, you don't have to make money every day. But the thing is not to lose all your money so you can't do business tomorrow. Pretty simple. Some days you're not going to make any money. Some days you might be arguing with your wife. Some days your kid might be sick. Some days there might be stress at work. Right? It's going to throw you off. Right? So maybe maybe you dial it down a little bit, watch, practice using your sim, get to know the market, make notes. You don't have to trade and lose all your money. Right? All you got to do is not do anything stupid so you can trade tomorrow. That's all that matters. If you're there tomorrow and the next day and the next day and the next day, eventually you're going to pick this up. Right? That's why we do test trades, right? Yeah, so that's why, you know, exactly, Raj, right? Lear. Thanks, Lear. Could you throw that in the lounge, brother? Thank you. Right? See now, they're lifting offers over 77. Do you see some buyers? So where's the next seller going to be? And speaking about options around earnings, we have at 11 a.m. our webinar with Earnings Watcher. Right? So they sold, you could see they sold into that before this level, right? The seller was here and they moved down, right? He's a data scientist, Mike. That's right up your alley. So we found our seller. Our seller is here, right? So now you know where the seller is when the market opens. What a thing, right? What a thing. Now you know where the sellers are. And they were here, and now they've moved down here. And when the next candle opens, you can see if they move down here. Why is that important? Well, because if you're long, wouldn't you like to know where the sellers are? Right? If you were long at 74 and you didn't sell at 78 and you were foolishly looking for 83 and then you got spanked, right? You got spanked hard. That's why what we do is we take the trade. If you go long, right, you put your stop wherever here, right, and you know there's going to be a seller here, and you anticipate a seller, you put your sell orders out. So the market takes you out as you go up, right? Why don't you just put your sell order here and pray that it gets there? Is that good business? Is that smart? If you've taken money and you've put it into a 75 long, and you could sell some at 77, 78, 78 half, why wouldn't you pay yourself? You guys understand what I'm talking about? I hope so. Because this is trading in a practical way, right? Theory and everything is beautiful, right? And all this complex crap that people look at is beautiful. And it makes you feel really smart when you're talking about stuff nobody understands. The problem is when you're trading and you get punched in the face, you freeze, right? But if you have your orders in, if I was long at 75 and I sold some at 77 half, that's 2.5 points. If I sold another couple at 78, that's 3 points, right? So you don't have to freeze, right? You do things intelligently. Like say I'm long here at 76. I know there's a seller up at 79. Let's go and put a sell order out at 78 and see if they take it. Now, if they don't take that sell order at 78, you know to get out of the trade, right? This is what I'm talking about. At tradingsyndicate.org, we teach you how to think practically, right? How to use practical common sense when you're doing business. Everything else is all smoke and mirrors, right? It's all smoke and mirrors. Right? You have to have a plan. And when you first start out in this business, you have to try and pay yourself. The problem with retail traders is they're used to losing money and they're conditioned to lose money. So it becomes a habit. A habit of losing money is not a good habit to get into. A habit of blowing up accounts, those are bad habits to develop in business. You need to have habits that make you money. You need to have good habits, good business decisions. The opposite? Yeah, sure. Right here. To look above and fail. Now here, this trade was we were at 4 times we were at 4 times profit, right, Truth? Right? So the market looks above 69.02 3/4 and comes back in. You leave this alone. Okay? What you're doing is you're waiting for that seller to lower price. So you execute here. Right? So here is where you're short. Right? And you could use the level, or you can use this as your stop. Or this as your stop if you're feeling like spending a lot of money. What I like to do is, if I'm short here and it takes out 69.02 3/4, I'm already getting ready to scratch the trade. And I'll probably have my stop here or here. So I've got a warning level, and then I've got a hard stop. I am executing at the edge. What you're not understanding is I'm waiting for the seller to reveal themselves. Why would I short the front end of the move? Because it could go like this. This you're hoping and wishing and praying that the trade works. Here you see evidence that sellers are lowering price. That's why I prefer to execute late. Because I'm not a tire biter. Can I explain the process more in detail? Yeah, we got 4 people sitting here with 5,000 contracts. One of them starts lowering price. They all start lowering price. Do you understand the concept? Right? The seller reveals itself when the top of the candles start getting lower. That's all you need to know. Right? It is a backfill. That's why you have a stop. And you're trading at 4 times cost basis. So this is at an edge. Do you guys understand that? If your cost basis is down here, right, you're trading at 2 times profit, 4 times profit, etc., right? So this is where the likelihood of price competition happening at the top. Right? Now the sellers start lowering their ask. That's what I tell you guys to watch the ask. That's why you execute, you put your stop here, and then you go put some bids in. And as the market goes down, it hits your bids and you get filled. Right? Now, if you are an inconsistent trader, right? If you don't make any money trading, learn how to go long before going short. Because learning how to go short is a more subtle trade. The only way you're going to recognize that sellers are competing is by being a seller yourself. Right? How can you know if sellers are competing unless you've been a seller? Go long, learn when to recognize competition. The best short sellers are distributors because they know when you see price. Anyone? Bueller? Anyone? Price competition. When you see others are competing and lowering prices to capture the buying. The reason why you guys are so confused about this is none of you have ever traded size. None of you have ever had to work out a 1,000,000 share order or 500,000 shares or 2,000 contracts, and you don't know what competition is. Right? You get stopped out when there's price competition and you're long. It's because you don't have your orders in. Right? So one of my guys is building a simulator that puts you in the chair of a wholesaler or a market maker, and you learn how to compete. Right? He's working on that. I think he's got the flu. But do you guys understand what competition is? If all of you have contracts, a lot of contracts, and someone is selling, they're taking your customer. Do you guys understand that concept? Imucast, you ask a lot of questions. Now I'm asking you, answer me a question. Do you understand the concept of price competition? Right? Good. That's when you're a short seller. When you see price competition, when you see the offer moving lower. Do it at an edge so you're not just shorting in the middle of nowhere, right? You need to find a seller if you're going to short, right? Do you see how there was a seller at 77 just now? So if you're shorting 76, you put your stop here, right? Why would you put your stop here? Because if those sellers goes away, they're going to hang you out to dry and the market's going to go up here. Now go put some buy orders down here and get a fill. You were long 75 and sold 72. Oh, that doesn't really make sense, but okay. Oh, 77. All right. Well, that's good. That's better. That's better. All right, let's open this puppy up here and see what they got in the tickle truck. No problem. 75 to 77 is a perfectly good trade. Now, let's see if we fill these single prints. Oh, no, we caught a bid. We caught a bid. It's going to be a little choppy, right? Bounce it around a little bit. Let's see what happens. Right to the stop. Let's see if we fill in those shorts. Yeah, filled them in. Boom. Caught a bid. Filled in the shorts. Right? So we got some selling, right? Down to 65 quarter. Right? And we're looking to adjust inventory down to the close. There's the close. So now we have corrected overnight inventory. Good stuff, all right. Now there's a little bit of short covering that comes in off of the close. Let's see where they sell into it. Oh, big green short covering candle. Where are they going to sell into this? Right? I don't trade in the middle. Right? Especially if I am not feeling well or if I'm tired. Right? I've been doing back-to-back one-on-one sessions all morning. So I haven't had a chance to trade really. Now let's see if we do a look above and fail of 72 and 3/4. Not just yet, eh? I'm waiting for a seller. I don't see how we got under 72 and 3/4, caught a bid and the offer lifted. If it's not clear, I don't trade. Short 72 and I covered at 70 flat for 2 points. So I was short 72, my stop was the top of that candle and I covered at 70. Right? So let's see if we do back and forth in the green zone here. I'll wait for the next candle to open and see if it opens under. Yeah, see, now we've caught a seller. There's some bids down here. It's a little choppy and the candles are big, folks. So if you're not comfortable trading fast, just watch, right? You don't have to trade the open, right? It's not, there's that seller again. So the seller was here, here, and here. So they're kind of hanging out waiting here, right? So if you're fast, you can short 72, 71, put your stop up here, and then cover. But you got to be quick. You got to be quick because these candles are big candles and they move fast, right? If it's a fast market, I'll buy the ask. If it's a slow market, I use limit orders. Hey, AZS, what's going on? Woof, up to VWAP? So we've got bids. We got bids. We got sellers up here, right? We have sellers up here just underneath 78. It's going to be a little choppy. That's okay, right? Let the market settle in. Let's see. Uh, long 73, put an order out at 74 and a quarter. Yeah, it wasn't the greatest trade. Price action, no, this is nothing. This is like the teacups at Disneyland. This is nothing compared to the price action during COVID. If you think this is a fast, volatile market, oh my God, just wait. This is nothing. This is family-friendly price action, right? It's a tough market to trade, AZS. The moves are big, so you have to really, really stock your move, right? You got to really stock your move. You can get offside so quickly. I like to trade Globex. I know a lot of traders are like, oh, don't trade Globex. Globex is nice and slow and calm. Make a little bit of money and then relax. You know? Yeah, sometimes the trade's not there, but that's like we're fishermen, you know? Sometimes you catch fish, sometimes you don't. That's the business. Yeah, you'll notice when it's really bad, the market will jump points. Like it won't jump ticks, it'll jump like 3, 4 points before you get a print. And in those kind of markets, retail traders should not be trading. Not unless they just like throwing money away. Right? There are times in this business that's not meant for us. Right? That's what people don't realize. You have to actually, you have to read the room. You have to know, you have to stay in your lane. Right? You can't pretend you're a fund manager when you're trading a $2,000 account. Right? So you wait for the right opportunity. That's what you have to do. Right here, I don't see a trade. I don't see anything yet. Waiting for some more order flow to come in. I got to say I'm a little short biased just because, I don't know, for some reason I am. But I'm going to let the chart speak to me. Right now I'm seeing bids at 68. And I'm seeing sellers in the 74s. Oh, there they are again. So I won't just trade a particular candle. I wait for a setup. And as you can see right here, if you're a fast trader, you could short 72, cover 68 really quickly, but you got to be quick because that's a 1 minute candle. These are big candles, my friends. Big candles. So we're just waiting. Let this thing work itself out. Take your time, relax. You guys are really quiet. Really quiet. There we go. Right to VWAP. Jeez. Okay. Now we're going to come back and backfill a little bit. Do you think the chop is a result of FOMC price action? Do we have an FOMC meeting today? Oh, probably. Damn, I missed that. It is Wednesday, isn't it? Wait a minute. Wednesday, February 18th. Minutes. FOMC minutes. Maybe, right? Oh, today's Vixpiration? Okay. There's a lot of different things going on, right? But this market is a speculative market, and I've been saying that since January. You know, I told you guys that this is going to be very speculative, right? Yeah, no FOMC result, but minutes, right? So what happens when you get these big ranges? It's because the large speculators, our large speculators are making huge amounts of money off of these ranges. Now, once we clear VWAP, and I'd say once we clear this area here, the position will be underneath us and we're going to go sell it up here if we can, if the order flow supports. I told you to expect a market like this, right? Resetting cost basis, all of those things. Long 79, selling 81 and a quarter, on 3, flat. Why did I take that trade? Because I told you they're gonna, as soon as we get over this area, they're gonna take all this cheap stuff under 77 and go sell it here. What's up, Chadwick? How you doing? There's the previous day high, ran a few stops, back down, right? I'm not a breakout trader, but that breakout made sense. And I wasn't looking for a huge win. Couple of points here, a couple of points there. Pay the phone bill, right? Pay the phone bill, right? So, ladies and gentlemen, 11 o'clock in our room, we have Amin from earningswatcher.com. And he will be talking about his product. We invite you to come, check it out. Took the long off the bottom, 74, 78, beautiful. Right. I don't know anything about this stuff, so I'm going to be learning. I'm an old eye gouger. I find the bid and I hit it. So I'm looking forward to speaking to this gentleman. Also, he's from France, so I get to practice my French. I'm very happy about that. Now, my friends, if we accept over yesterday's high, target will be 94. But there's going to be some sellers up here at 87 and 3/4 and just under 90, right? There will be sellers here. Mark the sellers so you know. right? People who are swing short are going to be using that previous day high as their stop. Nice. Well done, Leslie. Beautiful done. Beautifully traded. Beautiful, beautiful. Right? So once you get people trapped in cost basis, when they go to cover, what do? Raise price. Right? Raise price. A little back and forth here. Back down to VWAP. Distribution. We should slow down when we come down to this level here. Oops, sorry. Move some windows around. Alrighty. That trade off of VWAP would have been nice. It was too slow. I didn't get it. Why do they never give you a fill at the good levels? That's because the Dukes took the good fill. No. Good. That is a good observation, Hex. there's overhead inventory, right? From the overnight. Also, we were talking about this yesterday. There's a lot of people who are on this AI is going to kill a bunch of software companies crusade. So maybe the buyers are not as aggressive as they usually are. Actually, Chadwick in ES, it's first in, first out. CME order matching engine is FIFO. Right. So, anywho, let's see where the next trade is here. Oh, there's a seller at 80 and a quarter. There they are. No. If you want, Chadwick, you can go to the CME website and read about it. It's all there. I'm not making it up. So we got sellers, and we're going to come back into this cost basis here, right? Right. Big sell order, all the way down. We'll be looking for 68 and change here, right? Now that is why I tell you guys to get your orders in, because you want to get in line. Yeah. It's a fast market. It's a fast market. Right? That's why I'm always telling you guys, as soon as you're long, go put your sell orders out. As soon as you're short, go put your buy orders in. What are you waiting for? Right? Alrighty. It's a little bit of a position here, and I can see the position just because there's candles. Right? So there's time and volume traded here. That's why we stop. So I'm waiting. If I was short, I'd want to see a more aggressive seller at 72, and I'm not seeing it right now. Right? I know there's a seller here, so I don't really want to go long. Right? So I have to wait. If I miss the trade, it's not the end of the world. There'll be another one. Right? There'll be another trade. Right? And sometimes you got to let the snowplows clear the road before you get on it. You know what I mean? Right? Sometimes it's choppy, right? And you don't know what the heck's going to happen, so just wait. Just chill and wait. Let's see. Bitcoin 66,852. Ethereum 1959. Not much going on here. You see why I'm not taking a trade. There's a seller here, there's buyers here, there's no real direction or follow through yet. So why would I put my money on the line if there's no follow through? I need follow through. If there's no follow through, there's no trade. So let's see. Now I'm starting to get interested, but I know that there are sellers here. Look, there they are. Boom. Okay. Then there's going to be sellers here just underneath VWAP. See, I missed that. What's RXT, Travis? Is that a deal? Is that a stock? That's what they're meant to do, right, Travis? That is as nature intended. Sell stock. Right? It's a distribution business. Sellers at 80. Let's see if we can hold VWAP. Let's see if we catch a bid. How much follow through over VWAP yet? We got to clean out those sellers, see? See how they're just creeping it? There we go. There we go. Make sure you have your sell orders out if you're long. Make sure you're selling them. Right? If you're long over VWAP, make sure you got your sell orders out or hit bids, right? Sell bid, sell bid. Does that make sense? The price movements aren't going to last very long. Some junk penny stock? Oh, that's always beautiful. I love a junky penny stock. Especially when they give me 1,000,000 shares for free. Coming up on Friday, yesterday's high again. Let's see what we get here. Right? And if we take out that seller at 90, if we can take that 90 seller out, they were there again. They'll probably be there again. They'll be back, right? It's going to creep higher, right? Oh, my goodness. Oof. It is definitely a difficult trading environment, ladies and gentlemen, which means you really, really, really don't want to overtrade. You don't want to get stuck in bad trades, right? You really have to just be so careful in this market. And we're looking for 68.94, my friends. 68.94 if you're long. Close. Got close to 93. What's going on, guys? You awake? Everybody okay? Anyone still there? Just checking. Chat's kind of gone dead. Just want to make sure everyone's still got a pulse going. Or my microphone's still working. Looking both ways before you cross the road? Very smart. Very smart. All glued to your charts? Why do I use VWAP? I use VWAP to get out of trades. I don't put the standard deviations on there because there's just too much crap on the chart. There's 94. Once we take that stop, that's going to generate some buying, and you'll be looking for 68, 98 and a quarter, where those single prints are. Ah, where are you, Travis? You still up northern Alberta? Yeah. What is it, minus 40 out? Must be horrible. Looking for 98 and a quarter. Close. Now we're going to backfill. Look for bids at 94 because that's where we took that W stop. There's the bid right there. Now if there's big sellers, we'll go underneath 94 and try and find a buyer and then lift price away from that buyer. There you go. It's a little choppy. There, see, I told you. We went down here, found the buyer, and then lifted price. See? Because when we took that W high, that's where the bids are. We came down, tickled those bids, and then moved up off of them. You guys are going to see that the same thing happens over and over and over and over and over again. Yeah, frostbite's brutal, Travis. Glad that you guys are looking after yourselves. Right. Now, 6,900, of course, is a nice round number. Let's see if they sell into the 6,900s. Right. As we run out of supply, we will go into these single prints. They're like a storeroom for ES contracts to the downside. And that's from the liquidation of, I believe it was the 11th? 12th, sorry. The liquidation of the 12th. Now, last time we were up here, folks, in Globex, we stalled out at 69.02, right? So if you're looking for a short, give this a minute, right? See how they're lifting the offer? Let's see how much they can lift the offer. And if I'm looking for a short, I'd love a look above and fail of 69.02 and 3/4. 69.02 is the yearly open. Very cool. And very responsible of you for tracking that, Leslie. Thank you. Right? So if you're long, I would be lightening up. I mean, if I was long 95, I'd be selling into these twos. Right? So we got the 2.5. No tickle at a 3/4 yet. Give it a second. Oh, can we get there? Oh, we did it. Now we're looking above 69.02 at 3/4. We take that overnight high and accept above it. That'll spur some short covering. And then we'll be looking for 69.06 and then 10 and 13. But if this is a look above and fail, and we come back down underneath, right? So say you're waiting for a short, say you're hitting it and you're short here, put your stop at 69.03 and put some bids down at 6,900. If we start accepting above 2 3/4 and 3, then you're going to start getting stopped out of that trade. Right? Your risk is the top of that candle. Because if we lose that seller, why are you short? Right? You need the seller to be there for you to be short. That's why I kind of like to wait, right? And if I'm short too, right, I'll put some bids all the way down the ladder in the ones and see if I get filled. If I'm not getting filled, I know, right? I know. No fill, no good. Watch that offer. Watch that offer. Right? If we start accepting, you got to close your trade. Right? We need that seller to be aggressive at 2 3/4, 2.5, 2. That's not an aggressive seller. Right? Don't be afraid to be wrong. You're going to be wrong all the time. Just don't be stubborn and wrong. Stubborn and wrong is broke. right? Wrong is okay because that's why you have risk management and you have stops. Stubborn and wrong, it's just bad business. Know what I mean? So I shorted a little at 2 and I covered at 2 3/4, 3, right? I scratched it, right? Actually, I was short 1.5, 1 3/4. I scratched it. I took my lumps. Big deal. Well, now I'd be out 4 or 5 points. Well, what's the point? Admit you're wrong quickly, right? Just pretend the market is your girlfriend, right? You just admit you're wrong quickly. The pain will be over quick. Right? So we're chewing through these single prints. 24 is the top of them, right? Our next level is 69.13 3/4 on my longer term chart. Yeah, where are the next stops? Good, good question, Raj. The next stops are here, brother. If we fill these single prints, the next stops are here, and then we have another set of single prints up here. And then the next set of stops up above that are going to be all the way up here at 69.72. What did I tell you guys about rotation? If we don't take 67.88, we are going to rotate back up. Those of the size traders who took my advice and went long yesterday on that swing at 6,800, 68.15, you are, thank you, you're welcome for a 100-point trade. Right? There's 69.13 and 3/4, right? Look how we're running out of supply. This is rabid short covering, my friends. I told you guys that this would happen, right? The rotational nature of markets cannot be denied. Look below and fail, rotate up. Look below and fail, rotate up. It happens all the time. Once you identify a nice rotation, if you're a big trader or a swing trader or you're trading options, that's all you do. Even if you get half of that move, right? Even if you get half of that move, you're styling. Right? So 5 hours ago, I told you guys this thing would rotate higher. I told you guys it was going to rotate higher again. Right? It's just rotation. That's all it is. I do not merge adjacent market profiles. I used to do that, but it didn't really give me an edge. I'm really simple, MCM, right? I'm a very simple trader. I wait till a market looks above a level and fails, and I'll go short and put my stop here. Or if it comes down, looks below a level and fails and goes back up, I go long, put my stop here and sell into strength. Right? All I need to know is the cost basis, right? I want you to look, you don't need to merge the profiles, right? Once we get over 69.13, all of the cost basis of that liquidation move is going to be underneath us. Right? The inventory is underneath you. What do you do in a market? You take the cheap stuff and you go sell it higher, right? So you can use composite profiles. They're kind of cool to look at, but there's actually no discernible edge in trading them unless you've figured out an execution plan. Make sense? If you have, please let us know. See, now as we backfill, right? You have 3 or 4 minutes of backfilling here. Look for bids at 69.04. They'll probably front run it. Um, there's a lot of information you can look at when you're trading. There's tons. There's all sorts of stuff. But what can you actually use to make money in a simple manner? Does that make sense? I don't like overcomplicating things. Because when you're in an execution, when you're in a live fire trade, I want to have my wits about me. I want to have my analysis done. And so then it becomes muscle memory, the trading. Do you guys get that? That's why I won't freeze and panic when I'm in a trade. And that didn't come naturally. It's something that you have to work at through discipline and execution and doing the same thing every day. So I've found a simple 5-step method to trading any market. And that is, if you're a trader, right? If you're a trader, you need to know where the inventory is priced. Great, right? The inventory is underneath us, right? Then you need to go and see it. What's the inventory? Where's the 2 times, 4 times, 8 times, 16 times profit, right? So where am I going to take a trade? I'm going to take a trade when it goes on sale and then goes back up. Or I'm going to take a trade when the sellers start to compete. See, support, right? Support is unfilled buy orders. Resistance is when sellers compete. Luis, come into our trading room, brother. I'll teach you. Getting consistent is about repetition of a business process after learning the business. Bingo, exactly. Looking for bids at the overnight high. Let's see what happens. Right? We're looking for bids here because people are trapped short underneath. There they are. Now, if the sellers start competing, we will get underneath the overnight high. Now, I'm not trying to get $19 out of you, Luis, but I'm saying if you spend some time and come into the trading room, we can talk, you can ask me questions, because this YouTube thing, I'm trying to show you guys what's possible. But if you really want to learn, show some interest, come into the room, direct message me in the room. I talk to people all the time. If you're having trouble, I'll get on the phone with you. Right? Now, it's not one-on-one coaching. That's a more expensive program, and that's a lifetime commitment on my part and your part. But if you are wanting to learn, give it a shot. Right? Don't go to McDonald's. Just one day of not eating McDonald's, you'll be able to afford a month of education. Right? We'll teach you the business. Right? Now we're in distribution, right? We're distributing the cheap stuff I told you we would. We're selling it up here. That's why it's kind of chopping around. The shorts are bid under 4, and they're holding the market up, allowing us to sell up here. Oh. right? As buyers come in, they will raise price. See? Any questions? Right? We want you to be consistent. We don't care if you make 5 grand one day and then lose your house the next. That's not trading, right? We want you to consistently be making profits, right? And when you're not making profits, we want you to not be losing money. That's all you got to do. If you don't make money today, that's okay. We just don't want you to lose all your money or blow up your account. Right? That's the most important thing. Right? The most important thing is not making money and thumping your chest. The most important thing is having a good business plan. And when that business plan doesn't work, you and your money get the hell out of Dodge. Right? You run for your life when that business plan doesn't work. Right? There's a business reason to take a trade, there's a business reason to stay in a trade, and there's a business reason to get the heck out of a trade. You need to understand how that works. Otherwise, you're just basically throwing darts against a wall. Right? And if you go into any trading room, ask the person who's running it, ask the person, the educator, tell me the business reason for taking this trade. Explain to me the business behind this transaction. If they can't, something's wrong. If they say, oh, it's just random, they're full of crap. It's like people who teach volume analysis who have never traded volume. Right? It's just a fool. It's just the blind leading the blind. Yeah. Well, what's the business reason for the trade? It's a simple question. Right? What's the business reason why you're taking a trade here? Explain it to me. Right? And explain it to me like I'm a 4-year-old or a golden retriever. Because if you can't make it simple, it means you don't understand it. Right? If they say the full moon and the delta and my cat didn't go to the bathroom and all of those things, that's not a business reason, right? It's got to be simple and clear. Right? You go long when there's no supply, you become the supplier. You go short when there's too much supply. You know, you should be able to explain it in a simple manner. Oh. And the more people who short a market, the higher it goes. I haven't seen Galaxy Quest. I'm going to have to watch that one. Any questions, folks? Now remember, 11 o'clock, we have Amin from Earnings Watcher in our room. 11 o'clock Eastern Time. No problem, Luis. Get them to explain the indicator. That's always fun. Anyway, I'm not here to give other people a hard time. I'm just saying, if you're paying somebody for trading education, I hope to God they know what they're talking about. You know, it's a simple business, folks. You buy some cheap stuff, you sell it at a higher price, you book profits, you go to the bar, right? Or now, these days, you guys go and have a kale salad. How do you determine cost basis? It's real simple. You look for back and forth action over time. Back and forth action over time establishes a cost basis. Right now, we have a cost basis here. This is a distribution cost basis, right? So what I do every morning, I have a 5-step thing. I go and I find the cost basis. If we're in trend, I'll use the cost basis from the close of the previous day, right? But generally, Globex is kind of slow, so it establishes a cost basis like we did last night. You establish that cost basis, and then you double it to the upside, double it to the downside. And it's simple. MCMXCI Radu. It's so simple that you won't believe it. Then you'll see that my levels work pretty much to the tick. In stocks, they'll work to the penny. And then you'll be wondering, what the hell is going on here? That's okay, but then you got to learn how to trade it. And learning how to trade it is coming up with a business plan where you understand the business reason for the trade and your risk is put where the trade doesn't make any sense. You don't have to use the nodes. You know why? Check this out, guys. I'm going to save you some money and time here. Okay? If you went and looked at this cluster of candles, you're going to have your high volume lymph node. If you do here, you're going to have your high volume lymph node. Because when you trade sideways, I'll go show you, right? Let's draw a volume profile. If I draw a volume profile from here to there, look, there's your high volume lymph node, there's your other high volume lymph node, right? But you don't need it. You don't have to use it, right? I'll draw it to show you guys what happens on liquidation. And now we're in distribution, right? So you see how we took that big chunk of volume underneath 68.84? Watch. And you see how it's building out at 68, 69.10, 69.15? This is distribution. Accumulation, distribution. Very simple. But if you see a cluster of candles, there's going to be volume there. You guys get that? Exactly, Raj. Time to make the donuts. Here we make the donuts. Here we put them in the truck. Here we sell them in the store. Right? The barcode patterns are the nodes. Right? Does that make sense? It's just time and volume traded. The more you go sideways, the more volume you build out. Now we're in distribution. Before we were in accumulation. And didn't I tell you that once we get over 68.87, we're going to go and sell it up at 6,900? And that's exactly what we're doing. Now, how did I know that was going to happen? Because it's the same thing every day. Now, if that doesn't happen, it means we've got a seller. And nobody wants to buy it. Here, we don't have any sellers. All the products owned under 87, and they're happily selling it at 69.15 and making a beautiful profit. You want to trade with that flow. You don't want to be trading against that. You don't want to be shorting this, right? Because what happens is the people who shorted in cost basis, when they go to cover, all the supply underneath 87 is gone, and the size traders just lift price up and force them to cover higher. That's how markets work. That's how markets have worked for thousands of years. right? It's the same on a 15-minute. Exactly, Raj. 15-minute, half an hour, the whole thing. The pre-open POC on the 5-minute chart, I have no clue, $6 million man. It's something I've never looked at. If it makes sense to you, do you have a way to trade around it and make money off of it? Have you looked at it 1,000 times? I've looked at the offer 10,000 times, right? And I know if the offer's moving up, price is going higher. If the offer's moving down, they got a sale. That I know to be true. But the pre-open POC on a 5-minute chart, I have no idea. I've never even thought about it. It could work. I'm not saying you're wrong. Right? I'm not saying you're wrong. It's just that I don't know because I've never looked at it. Right? I'll never BS you. It might be gold. Right? 20 to 30 times. Keep looking, brother. Keep looking. And then let us know how it works out. I can't look at everything. You know, people will say, I trade the 80 EMA. I trade the 21 moving average. And when they cross over and the wind blows to the northeast, then I go long. It could work, but I just haven't done it. Now, Ed is backing you up on that. But is not something that I look at. The other thing is, if there could be a phenomenon that happens, now what you must do, my friend, is wrap a trade around it. Right? So how do you use that how do you use that information to make money? Right? It could be something. You might be onto something. Right? Ed's smarter than the average bear, so if he's looking at it, you might be onto something. Right? Ed spends a lot of time looking at these things. So, ooh, aggressive seller at 13. Oh, that was just a stray order, maybe. Right? Just keep at it and let us know the results. We're here every day. We are here every day. Now let's see if we can move that point of control, which is, where the hell is it? It's all the way down here, 34.54. Let's see if we can move that up here. I think we will. Right? And when that point of control moves up, that's good distribution. We made good sales. Right? It should move up here somewhere. Maybe 13 3/4. Maybe not 12. Let's see. So 3454. That's what we're looking at. 3,400. Right? We need another 20, 30 contracts at 13 3/4. Not yet. And you'll see those green letters, they'll go blue. There you go. 34.85. Right? So that just tells us that the point of control moved up, which means good distribution. We're making good sales. Right? That inventory that we had at 72, we're losing it at 69.13. Yeah, I don't know, Raj. We'll see what happens, brother. All I know is in a minute and 20 seconds, we're going to have some single prints. Right? We're going to have single prints all the way up here. And that's going to represent your short position. So let's see. Now, after that distribution, we might have to put it on sale. Right? We might have run out of buyers up here. Let's see. 38 seconds left. Now, sometimes when the POC moves down, you get a move down quickly. I mean, when the POC moves up, good distribution, and they'll start selling the market down. But right now, it's kind of, right? I'll wait till the next half-hour period, see where the single prints are, find out where the shorts are trapped, because unfilled short covers, right, are where the bids are. Single prints are single letters in between two distributions in a market profile. That's all, right? So there's your single prints. 68, 98 to 12. They're going to backfill some of these, and then you're going to find the bid. So if you want to learn how to do this, my friends, if you want to learn how to trade with common sense and taking the tools of market profile, making them practical, right? So you don't have to spend a lot of money on software and indicators. I'll teach you how to trade using a 1-minute candle chart. And then once you get good at it, we can expand time frames, okay? And size, right? Learn how to be consistent, learn how to make a living, right? No BS. Come into Trading Syndicate. We'll teach you how this business works. Thank you for being with me, and we'll see you tomorrow morning, 7:30 in the morning UK time, 2:30 in the morning New York time for my insomniacs. Appreciate you guys. Lots of love. Have a wonderful trading day. Bye for now.